Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market had a choppy week last week, really sticking in a narrow range. Overnight selling came, well, pretty often, but that brought buyers. And then we saw some days with overnight buying, and that just seemed to bring sellers. The net result was overall a mixed market and a small change. Trade was still in focus as investors really got whipsawed by the news. Early in the week, we had heard that there was a U.S. China trade deal, and the market celebrated that by gapping up on a Sunday night, Monday morning. And then by midweek, the president was saying, well, that deal is really hard to do. Difficulties that we're seeing in trade is likely to continue as we saw the president also say that he was starting an inquiry looking into imports of foreign cars and talking about tariffs there also. Geopolitics seemingly never ending in the background news as the president called off the summit in North Korea. That brought some selling in the market, some of the hardest selling we saw during an intraday period. In Italy, the bond market, bank markets, they have continued to collapse, and there's worry there in the Eurozone as is the Euro crisis coming back, Euro crisis 2. As Italy is the third largest economy in the Eurozone, and their populist or new populist government is anti-Euro and is really giving the European zone fits. And there is a lot of worry there that has been helping our bond market. Add to that Turkey with their the Turkish lira literally collapsing. It's down over 20%. And the big outflows of capital from Turkey, that's lifting the yen. That yen rally comes or the dollar decline versus the yen, depending on how you look at it, at almost exactly the time that we expected it. You can see our future speak analysis on Wednesday in order to see that in-depth analysis on the dollar and on the yen. We also continued that on Thursday in our big picture analysis of the gold market. So the stronger yen to us for the dollar means that it's likely signs of a top in the dollar, even though the dollar is making a new high, recovery high on Friday here. Add to that what looks like a changing environment with the bond market having an up week, the gold market signs that it's bottoming, and that all points to flows of money changing in these markets, and that could have a message also for the stock market. Let's take a look at that stock market and what it did on an intraday basis and how the news affected it during the week. This is a 60-minute chart of the S&P 500, the gray areas being overnight and the white area, the normal day trading or pit trading period. Here's that news that came Friday. Look what it did. It gapped from this all the way up to here. And the market was excited about that China deal. It opened higher, you can see here, and then basically chopped during the day. Made a nice triangle that you could see right in there. And then overnight, we had an upside move again as good news came out of China. Again, they were going to lower their tariffs on cars coming into their country. So our auto companies, well, those stocks did pretty well. Wednesday was the big news day in here, and you can see in here after that opening here on Tuesday that gave up the whole advance and started to move down. That news came out that Trump said that the trade deal is just too hard to do. the China market dropped 2% on that news, and then the Italy bond rout was going on. The Eurozone, their purchasing managers index all came out weak. Turkish lira cracks in a big way, which sends the yen up just tremendously, and then the bonds got their first decent pop of 1% right there, and that caused all of this selling overnight. But then, as often happens, the market firmed, as you can see right in here, as they were waiting for the Fed. Well, the Fed came out with their minutes, and they were actually pretty dovish. They said a June rate hike was likely. They said the labor market's not overheating, and the yield curve seems to be less reliable. And it seems like every time something comes that could be warning of trouble, they make it less reliable or completely erase it. If you can remember back at the beginning of the financial crisis, when all of the banks were deeply underwater in much of their holdings, they just simply got rid of FASB 109 and said you don't have to mark to the market anymore. So if it could be bad news, we're going to get rid of it. And that's exactly what they're saying here, that the yield curve seems to be less reliable. What happened? Well, as we do very often, we got a big rally here after the Fed minutes. And then right afterwards, we get this point here that the president made that he was going to look at putting tariffs on foreign cars. We got this busy overnight period in here. Oil drops right over here on growing U.S. stockpiles, and home sales fell and home prices are increasing. They jump 8.7% year over year. That's the fastest in 12 years. And then the market heads down on that as President Trump canceled the Korean summit, and you could see we got wailed on right in here. But then a big V bottom as it reversed and came back up. And then on Friday, we got pressure in here. Oil was down $2 early right over there. It's down over $3 right now, as Russia and the Saudis came out and said, well, they're going to pump more. If the Iran situation and those sanctions mean there's less Iran oil, then they're just going to pump more. And of course, we have this huge growing stockpiles in the U.S., and with oil at 70%, the shale producers are going to produce more. So lots of oil out there. There's no worries, and that sent the energy stocks down sharply. And oil down sharply is weighing on the market here on Friday, and we're on a pre-holiday period, and that is very much a look at what happened in the last week and all of this news that seemingly keeps moving the market around. For the week, as we look at the market now at just past the midday period with about 2 hours, a little bit more to go, we have the S&P 500 and the Dow Jones Industrial Average just up a tiny little bit. That, of course, could change. The Russell about unchanged on the week. That has been the strongest of all of the indexes, and that's based on the change in the tax plan, which basically does a little bit more benefit for the lower cap stock, so that's why the Russell's been stronger. And the NASDAQ is up over 1% on the week at this point, so that clearly is the best index this week. 30-year bonds up 2 points or more, and that's all on this Italy and Turkish issues out there that are scaring the markets. And we're thinking that there is a low established, at least in price. We might get another dip in the bond market. However, we think that we've seen the worst of it for now, and we're about to get into an intermediate rally. Again, you can watch Futures Speak on Wednesday and see our analysis on that. 10-year yields dropped from a peak late last week of 311 down to 293. So 2.93. That's a very large 18 basis point drop from the peak. Dollar, you would expect with interest rates falling that the dollar would decline. However, the dollar is getting also this safety bid, and that's unusual to see yields drop this much and the dollar actually hold up. It depends on how you look at it, of course, because if you look at the dollar versus the yen, as we said, the yen is much stronger. So there is something in the wind here that is changing. Gold picks up about $12 on the week, reversing from this big decline it's in as it hit a support area and then bounced. So we expect that we did this video on Thursday on the big picture in gold, And we give you the reasons why in there we think we're entering into a more favorable period. So you're going to want to watch that video also. Oil moves down almost $4 on the week. Friday it moves down 4.4% on this news about other producers going to fill that gap, and that is bad news for the energy market that we had been looking for a top, and sure enough it looks like we got it. For the stock market right now, we have been looking at, based on our cycle analysis, that late May through June would be a very risky period. That was the time period that we thought that the market would have another leg on the downside to this correction. Now, while we have raised our downward targets for this period, the patterns have really not changed, and we still see a decline coming for the stock market during this period. We think the next 5-6 weeks have a lot of risk on the downside, and we're going to be cautious and say that we still think the S&P 500 is likely to move down some 125 to 150 points over the next 6 weeks. Pretty bold call. We don't usually like to make really bold calls. Well, if you look at the percentage-wise, it's not all that far. In fact, it's pretty normal. That's it for the opening segment. We'll be right back with the best and the worst stocks for the week. All right, for the best stocks for the week, we don't have a lot to look at in either of these categories for the best and worst stocks. The absolute best gainer and retail actually overall was strong, though there were a couple of retail stocks that did get hit pretty badly. We're going to look at the first one is Tiffany, which gains 23% on the week. There's some people spending some money on the high-end luxury goods. You can see that. This is an example of very strong cyclicality that shows in here what we call positive configurations that keep the move going on the upside. So we're looking back all the way over here 2 years over here, and you can see this positive configuration. So in other words, that's a higher bottom, a higher bottom, a higher bottom, higher bottom. Each of those tend to bring higher highs. As each of these rallies, well, this one only equaled it, but then it got over the high here. This gets through these fib extensions right there all the way up past that 161.8%. Usually when you get something like that, it is really excessive, and you could see that we're anticipating that this one has just come too far. Strong earnings, strong guidance, analysts upgrading it, but the stock moves up in the last week from 102 to 130. I think for a stock like this, that is incredibly excessive, and we're going to look for a pullback as this may still be a resistance area as it just gets through the 161.8. That is a long way, and certainly the stock has been really powerful. Now, there's one more point I want to make of the importance of moving averages. Most of the time during corrective periods, which you can see are right here and here and here, that you end up getting a period where it corrects, and often corrects down to the 34-week moving average that you could see right over here. When it gets really far from the 34-week moving average, then there's a mean reversion and it tends to move back down towards it. Well, look how far away it is right now. You see the 34-week moving average right there. That just says to you, this stock is really due for a pullback in here. Bullish stock or not, this is a stock that looks like it could have some trouble. The next one in the same category in retail is Foot Locker. This is an interesting one also. You can see it was a stock that was moving to the downside, and then it built this base right in here. So what a base is that you get these negative cycles that you can see right in here, and then it has a positive configuration. Hits the that area right down over there, and that's making the bottom of this cycle and then turns up. So that's all positive, but then it hits this resistance zone again. So again, what we're looking at is the potential for a mean reversion, for a cyclic corrections from somewhere in this resistance zone, and then getting back to this rising 34-week moving average somewhere right over there. So we think that it's it's a mistake to be buying these big upside movers right now in the retail category, because they're just have moved too far too fast, and there will be better buying opportunities in them. I'm not saying to short them. We're looking for pullbacks. Here is Lowe's. Now, Lowe's is a stock that had a very large drop. In other words, it gave up almost the 78.6% correction level right over there. So usually it will roll over into that resistance zone right there, and we're kind of looking for that to happen again. But this one is much earlier. You see, that's only the third week. So we would expect that we would get some kind of a minor pullback in here, and then it would try it again. So this one, a little bit, because it's early in this advance, this 3 weeks into it, well, you could see this advance went for like four months. This one did the same thing. So it says that this is an area where it should stall, but you're likely to get a buying opportunity out of it. And the analysts are talking about the fact that they are likely to start overperforming or being in a slightly different niche than Home Depot is. But their earnings missed, their revenues missed, but their guidance was really strong, and analysts loved it. And maybe the big deal is that Ackman took a stake in here of 5.1%. So that's what moved the stock up, and we think that if it pulls back, it's going to be a buying opportunity right now. Micron MU in the technology category, this pattern is really improving. Now, I keep talking about that 34-week moving average. If you don't have a 34-week moving average on your weekly charts, then I think you're missing out on some really good information. You can see how it tests it and tests it and tests it and then moves sharply away from it. So we're looking at, in this what we call harmonic family, that there are three minor moves in there, three minor cycles. Here's the first one that you see completed, the second one that we're in the rally of. This one looks like it wants to jump to a new high. So if it does that, it's really going to be an improved pattern. It had given up quite a bit touching that moving average, but now you can see it's really strengthening in there, and that looks to us like a very much improved pattern. Man, when you look at Intel, which is just a monster on the upside, you got to say these semiconductors overall are looking good. And what really helps this stock, a huge $10 billion buyback, and that is a huge vote of confidence for this stock. I think if you get a pullback in here, you do buy it also, because there's more upside room. If we get up to this cycle peak resistance again, then you see our projections in here. Those are going to change. They really should change already, because we're getting all the way up to that 100% fib extension again right now. So that's a good looking chart in there, and we think that it's likely to get more upside. The risk is more to the upside than we think it is to the downside. Netflix NFLX is a stock that also moving up to a high. We made the mistake in the beginning, our analysis of believing it was massively overpriced and that the competition was really going to cause them to have to spend a ton of money on content. And that might be true, and they are canceling tons of shows, but that doesn't seem to bother investors. On our riskiest list for 2018, and clearly wrong on that call. Now, it's gotten up into this area, which is a multiple 423.6% extension zone. I don't know. I can't see how the pricing structure in here is going to make a lot of sense. Forward PEs now trading around 80, and their growth just has to really keep accelerating in order to justify this price. You can see what we're projecting, a decline into July, into that correction, which would take it down to about 325. It's not that much of a call that we're making for somewhat of a modest correction in there, and we'll see if it gets worse. That is a key zone in there, and we would guess this area of fib extensions is going to be an area that is difficult for it. We'll see if that happens, and if we do start to get more of a corrective process in there. Remember I told you about that 34-week moving average, and when you get really far away from it, it's very often that you correct. We'll look at it again. Look how far away it is right now from that 34-week moving average. It is miles and miles away. If you just keep drawing it steeply moving up, you could see that like that. Well, That takes you down to maybe about 300 or something like that, and into that rising support zone. So a long, long way from that moving average, and just a reversion to the mean would be a corrective process in here that we would expect into July. As far as the airlines go, they were up about 4 or 5% on the week. They like it when the oil market comes down because that's their largest input cost. We're looking for a completion of their patterns. In other words, a slight little pullback into June. If we get that, I think it's going to be one of the best buying opportunities in groups around. That group is really looking to me like it's technically improving, and we're going to be looking for a breakout. We think that there is a nice opportunity coming in the airline market. Keep tabs on our analysis on that, because we'll try to alert you as the patterns get set up for what we think are buys. That's it for the best of the week, and we'll be right back with the worst. All right, worst of the week by far is Petrobras. That stock gets a big hit. Why did Petrobras, which is Petroleum of Brazil, Petrobras, why does that get such a big hit? Well, Brazil's got problems, and their truckers that move oil around, of course, their diesel expense is like 40-something% of all their expenses, and they were going on strike and crippling the country. And so, through some need for appeasement, we saw Petrobras cut their diesel prices, their energy prices, by 10%. It may be a temporary cut, maybe it's a temporary decline in the stock, but it is a devastating chart pattern when we look at it, and we think that this is a pattern that you really have to heed as potential further downside. That's a massive evening star that you see right in here. You don't usually get anything that big when you see that. That gets right up to that fib target zone, just below it, and then gives that decline. It breaks below this key level this week. That all happens in like 6-7 days. And yes, comes down to that 34-week moving average. This is a support area around 1235. We think it's going to get through there to about 11.25 between now and August. So a bad pattern in there. If it tries to rally, the probabilities are extremely high that the rally is not going to be able to hold. So this strike that was over fuel costs and their actions to lower energy prices, that really getting to it. While we're speaking about energy, we're going to look a little extensively in the energy group, especially the drillers. So here is Neighbor, NBR. This is interesting because we're going to call this right now a failure to launch. In other words, look at that inverted head and shoulders in there. Inverted head and shoulders, or head and shoulders patterns, are made by the cyclical patterns. And you can see that in here. This decline into that and this rally into the peak of that cycle makes a left shoulder. This decline and this rally right over here in those cycles makes the head, and this decline and this rally right over here makes the right shoulder. So you have a perfect inverted head and shoulders and a non-breakout and failure to launch. The target would be up over here near 12 if that did happen, but it didn't happen, and now you could see it move sharply away from that neckline. Even though it built the base and was supposed to make a higher high above 866, which it did, this looks like a failure to me. So as much as this looked like a good pattern, I would say right now this is looking quite worrisome. And again, we have a big engulfing pattern right over here, and that sets the peak to this cycle, which bottomed over here and now is declining out to here, maybe into September. That is not a good pattern right in there. We're going to say that looks topped. Talking about looking topped, that's a perfect dark cloud cover. It does it right in the resistance zone in Noble Corp, another driller in here, and that stock looks like it's got problems in here. Also, like it peaked in the resistance areas, and we would say it moves down also. This points to a decline into mid-August when we look at that. Bad pattern when you see that, right? Take a look at RIG, R-I-G. There's your big engulfing pattern right in here, and that says the peak is in place. Here was an engulfing pattern right in here. You see the peak is in place. This one, it actually managed 1 week above that level, and then it moved sharply down after that. So this looks like a peak. This looks like late July before that corrective period is over. Also, Halliburton and Schlumberger, they're in the same category. We had all of them down between 9 and 13% on the week, and they all look like they are topping to me. One more energy stock we'll take a peek at in here, Apache. There's an engulfing pattern. Now, this is interesting because it's got a major and a minor cycle in here. So you can see that cycle right there. When they're dotted blue, it just shows you that we made a small adjustment in there. And look a little closer right in here, and you will see that what we have is the minor cycle. Let me just grab this pointer right in here. And this pattern right here is very visible. You see that right in here. And then the next half cycle and the big decline. So you see that right there. There's the two cycles. This one, because it broke down early, put it in a bearish configuration, and the second cycle then should give you a sharp drop, and it did. Beautiful cyclicality. Look at right here, the rally and the sell-off. Now, probably an attempted uptick here, and then another sharp sell-off during this window of time between June and August. That is a bad looking pattern, and it would say to me that you short these stocks in the energies. And I'm going to do a special video on the energies this coming Thursday, so you can be prepared on that, on the oil group. Let's pop back for a second into retail. Look at that. Major downturn in there in Best Buy, down 12% in the week. Earnings beat, but their online sales growth, I mean, it was really a surprise how much that slowed down. And if they can't compete online, they can't compete, period. And that's why you get this big break in here. Again, you can see the multiple cyclical patterns in there. This rally and this sell-off right in here is very clear. You can see that. That says that you're likely to get a bounce in here, and then when that bounce is over with, you short it for the next big break, which takes you into late July. So if this stock bounces, to me, it is a screaming sell, a high probability sell. Do I have a daily chart in here? Well, look at that daily chart. You could see right there, as it comes down right into this period, we expect this bottom, this gap on the downside, and that looks to us like you should get a little bit of a bounce right in here, and that's this sell-off and this particular bounce. But you can see the gap. You could see the break under the 89-day. You could see the momentum turning negative. That's the red arrow on the slim ribbon. All of that is saying to you, this is a stock in trouble. And when you get this rally right in here or right in here on the weekly, then you just short it, and I think you get paid. Just short it? Well, you want to short it in the right spot. And we'll be putting those sell zones in our charts for our level 4 members. YELP, Y-E-L-P. You can see a giant M top for the second time. This is really interesting pattern in here. As you can see, this M top right over here, so this cycle and this cycle make the peaks at the same place. Each of these declining zones bring you big declines. This cycle right in here, and then this cycle right in here makes the peak at the same place. You could see that. This is due to decline, of course, into mid to late July. And you can see this channel in here shows you how this is rolling over. That's the same thing that happened here. And then you have a double engulfing. This one right over here, and then this one right over here, that says that is a pretty good peak area. Here's your evening star right over here. Here's an engulfing pattern right over here. All of those were calling for this area up near 48 to be the peak. I don't like this stock at all. I think it is hugely overpriced. It's on my riskiest list for 2018, and I wouldn't be surprised to see a very bad second half of the year in YELP. D.E. Shaw buys 5% of this stock, and the stock doesn't even care. and that's a bad look, a look at a pretty bad pattern when you look at that. That is the worst stocks for the week, and we're going to be right back right now as I show you our short-term view for the shortened coming week. All right, here we are, short-term view for the coming week. We're going to look at 5 major markets. And before I start that, I just want to remind you, everything that you're seeing here on all of our charts, our level 4 members get those. That is we do deep analysis on 80 symbols, and then we get requests for other symbols that we share with our members. This is our cycle analysis, and it's only available on your thinkorswim platform. If you're not a thinkorswim member, that is our preferred broker, TD Ameritrade. You can send me an email for a link, and I'll send you our link to sign up for a TD Ameritrade account. You can have all of these charts that I'm showing you. Also, our level 3 membership, which is our rankings and trade setups, where we show you all the rankings on 3 different time frames and our option bias indicator on one easy to read table. If you could see all that, we put our setups on there also. So when something really high quality sets up, we put something in there, and then you can decide whether you want to trade it. And of course, we have over 300 videos in our video library in 8 categories. If you're learning to trade, you want to learn about why there are obstacles in your way to success, that would be our trading psychology. You want to learn about different aspects of trading, you would go to our style, strategy, and plan videos. If you want to see about charting, we have a massive number of videos in our tools for techs, so you will be able to learn about that. We have just a great assortment there, and of course our Future Speak video, which is our second most popular video to Market Week. So you could have all of that, plus our new stock index report, an amazing report that comes out on Thursday mornings with a real good explanation of all of our analysis on the stock market. All of that content, incredible amount of stuff. You can have a trial for level 4, which would be just $74.50 for a whole month of viewing of all of that. Just unbelievable. Send me an email, slim@askSlim.com, and I will send you a special link for that. If you don't want to use thinkorswim charts and you're not interested in that, I have a special for you, half price also for level 3. You also get all the videos too. So either one of those, send me your request for the special link to slim@askSlim.com, and I will send that to you. And stock index report, amazing report on the stock market that you just got to see. It's unbelievable. And we're just in the last couple days on our special for that. So if you requested that $15 special, you just have till Sunday, and after that it's over with, and then it goes to regular price. So that's my promo on this, and please do subscribe to us, because that's so important. It's how we keep our huge team going and can keep bringing you all of this information. And Market Week every single Friday, 48 weeks out of the year. So that's it. We're going to get into the short-term view right now for the coming week. We look at just the daily charts when we do this. We're going to look at the oil market, the dollar, gold, the 30-year bonds, and the S&P 500. So we like to take an accounting of what we said in the previous week when we do this, so that we're credible. And it's important to me to always be honest, to always be credible, and that's why we do that. We try to be in the 60 to 65%. In other words, the movement in the markets for the short term matches the analysis, or our interpretation of it matches the analysis about 2 to 1, twice as often as we miss on that. and that is generally where we average. And this week we're going to give us about 60% in there. Where we missed was the dollar strength, which surprisingly came when the other markets moved as we expected them to, with the gold market bouncing and the bond market bouncing. Bond market we're only going to get half credit for because it bounced bigger than we thought that it would. And the stock market we get partial credit for also because we thought it would pull back, but it didn't pull back quite as deep as we expected it to. So we're going to look now at these markets, and we're going to start out by looking at the light crude market. Now, what we said about light crude was that we thought it would kind of wiggle early in the week and that the downturn was likely to come later in the week. I'll show you where that came from. That's right in here as you look at these patterns. So what we expected was that we would get this little bit of downturn right in here, and then we'd get an up move, and then it would turn down. We said last week that was what the note was on our charts. This big decline here is actually deeper than we expected, but it was very much in line with the fact that this decline came, it was pretty shallow, this rally came, it failed fast, and then turn down. And that points all the way out to here, which says this is a risky week still for the oil market after this big downside move that we had in here this week. 4 days in a row where it fell pretty nicely. The last 2 days, very hard. And this area right over here around 68 was the bottom of that rising support. Now you see it actually got down in towards the intermediate supports that we brought over for the week from the weekly chart. Here's the 89-day moving average, and that's moving up right over here. So we're expecting that this decline will continue actually, and that the depth of that, I'm just going to activate that, probably takes it down over here. So I'm adjusting that right now to about $66. So we're going to look for a decline. This week, you probably get some rebound after this big downside, but I think it's a sell, and the odds are really high that we're going to get these two cycles, this minor one in here joining this corrective one in here, and the market continuing on the downside. That's like this cycle right over here, and you could see that the end of that cycle was towards the downside. So that's what we're looking for, a choppy week. In other words, try to bounce and fail, and potentially getting down as low as 66. That support right there is 67 1/4. That one right over there is 66. Momentum in here was positive. You could see it rolling over right over here, and after this bar closes, it will absolutely change to neutral in there. So it didn't quite close, so that will be a neutral momentum condition, and the first change in momentum in light crude market for a long period of time. And you can see it was positive all the way through this period, and now losing momentum right over there. That's why we believe that there is likely going to be a rally that fails in the next week. Let's look at the dollar, DXY. Dollar getting bid based on geopolitical issues. And this is a key thing. Now, last week we talked about that our option bias indicator was overbought. This is an unusual thing to happen. It has stayed overbought for this week. You've made minor upside progress in here, but my guess is that you see this pattern right in here, that what's going to happen is that you get a little bit of a pullback, you get another attempted rally, and then it falls very hard during this period of risk. That's this period right in here, which takes you out into mid-June. So that's when we're thinking there's going to be a pretty good break. We're going to call this next week in here, and you can see still strong upward momentum very clearly in there. It's just a minor down week. And then, not quite ready to roll over in there is what we see. The euro currency, which you may be trading as the proxy in here, is just the opposite. This one shows extreme oversold for the last week, which is very unusual, negative momentum that you can see there, and a very good likelihood that this is going to be able to only get minor advances here for the next week or week and a half. So we're just gonna say only minor upside bounce potential in there. And in 2 weeks, this is all going to change, and we think that you will see a much weaker dollar and a much stronger yen, and that also, of course, rolls over into the gold market. So here is gold. We said last week it was a bottoming week. There's a rare quintuple star. See these 5 little dojis right over there? The point that we've been making to our subscribers is that you get downward velocity in the late part of the cycle, and then when you get to the bottoming part of the cycle or a peaking part of the cycle, the velocity goes sharply lower. And then what happens is when you get into the rising portion, the velocity picks up again. We think that that's what's happened, and that the bottom is in place, and that we're going to get a rally. Right now we're looking for only a modest rally, again because we think the dollar is not quite ready to roll over in any significant way. We're going to look for gold up to 315 to 325 this week, getting into that resistance zone and then stalling in there just temporarily. Right now the upside limited, but then I think in a couple of weeks I think that it has a much better chance of accelerating to the upside. So that is a look at the gold market, which we are favorable on. Please do watch that Thursday video on our big picture on gold. Here is the next one we're going to look at, which is the ZBs. We're looking at the 30-year bonds. Now, we were looking for a rally in here, and I've got a lot of notes, so let me get in here so these notes are a little bit clearer. The subscribers for the charts who haven't seen these yet, because I put them in there today. So there is really a huge amount of strength in this rally. You see it move up through the minor resistances here. That's the 78.6. This is the weekly 61.8 that comes right across the center of this resistance zone and that last peak right over there. That is a very key area over there, 144.10, 144.15. That's the area we think it's going to test this week, and then have a pullback after that. So we had a sell zone right in here based on the intermediate patterns we suggested was going to be causing it to pull back again. But moving up through that resistance right over there says that we have to remove the sell zone. And that is because the probabilities have gone down significantly of having any kind of a big decline. It's possible that this engulfing pattern right over here that we're showing you, that is the bottom, that the bottom level has been established price-wise. You could get some more pullbacks in here, but and expect that from this area of right up over here, 44.10, 44.15, right in there. But overall, it really looks like the worst is in temporarily for the bond market, and we could be entering into a period of a couple of months of it being more favorable. We expected that, but this has just come a couple, 3 weeks earlier, and it's maybe that it continues to waffle and that the low price gets tested, but overall, we think the low price is in on this, and we won't see it move much lower. There is a change of tone that we see in here in the bond market. We're going to call it testing this area up here at resistance and then having some minor pullback in there in the bond market. So the stock market, we had expected that it would drop, and then the time that it could rally would be late in the week. That pattern was mostly right, except that it didn't get down as far as we thought, and the bounce looks like it may be coming more early part of next week. So we get only partial credit for our stock market call. We had anticipated that it would be a narrow range or a small change week, which it absolutely is. Now, when I show you this chart, I'm going to show you why I thought it would be a narrow range. Where we were getting into was this pattern right over here, where this correction likely comes and this rally likely comes. That's why we thought we'd have a dip. And this is the second week in a row we said 26.82 that it didn't get down to. You could see momentum strong still, and as the slim ribbon keeps it strong, and that 13-day moving average, the blue line, still giving it support. Now, we were running into this downward resistance right over here, and we were getting this upward move right over here, and this bigger pattern pushing up. That all said to me this was going to get squashed and we were going to get a narrow range. And of course, when we're coming into a holiday weekend, it tends to do that. Well, it just did not get anywhere near the decline that we expected, so it changed the pattern by a little bit, but not much. Here's what we're getting into right now, and that is that, if this pattern right over here is this right in here, then you probably get a little attempted move in there. But this is a period of risk. So we're really looking at a period of risk here and then another one that comes out over here. So we think that there's the upside in the market is extraordinarily limited. Again, this area of 2744 really looks like about the best to us. And then getting into this really risky period over there for decline. In the beginning of the show, I said I thought that there would be a 125 or 150 point decline coming in the market into June. And that's this whole period that we're looking at right in here, and maybe extending out with this cycle right there. So this is a really potential period for the markets to fall very hard. It could just fall at its own weight to complete this pattern, or maybe some of this background news starts to get worse and then pushes the market down. We think that in the next week or 2 weeks, we're going to fall below this level of 2668 with a potential of moving down towards this 2600 level right over here. That would be about 140 something points off of this peak right over here, and we think that is reasonable expectation. So that's really looking out for the next 2 weeks. The if the market tells us that it's different by getting above this 2744 area and holding above there, then we will again look at the potential that there are changes in here. But this is the highest potential, this engulfing pattern, this downside gap from that 2744 area, telling us that that resistance that we thought was there from the weekly is playing and that the market has got trouble. In my mind, the question is more, do we get rally at all in here? Or does it just start to move down? If it gets below this 89-day moving average, under this 2706 area, you've got to then start to believe that, well, maybe there is no rally. Maybe they can't hold up and then start to move down. Yes, I think we're moving into a very risky period in here in the market. And outside of next week, that 4 days in the holiday week, when I think you could get a little more attempt to the upside, I think that the market is moving into a risky period. And we're going to look for the stock market to have some significant downside during this period right in front of us. That is it for Market Week. I hope there was a lot of great information for you. I want you to have a great holiday weekend. This is a time to relax, and I intend to do that and not look at the charts a whole lot, not answer emails that much, and really take a little rest in here and then get back to it on Tuesday. And I want to wish you having a really safe time out there because it is so crazy. And I'm always wishing you great trading.
Well, I'm going to the city and I'm going to a city.